Well, the Fed has spoken and the reaction is clear. Nothing at all. This is Bob Wiedemer with the Aftershock Investor Report. Well, the Fed said nothing. The market didn't react particularly positively. It was up before the Fed spoke, and it stayed about the same after the Fed spoke. You know, really no surprise all the way around. People still expect interest rates to go up in September. I have kept emphasizing just how unimportant I really think this is. The real key to the stock market isn't interest rates. The real key is money printing, and that's the only thing that will really drive this market up, and lack thereof will be what really drives this market down. And the Fed said nothing more about money printing, as you would expect, and I don't expect them to say anything until the market falls anywhere between 10 and 20%, more likely 15 to 20%. So another day, another non-Fed statement, and way too much focus on it and way too little focus on real money printing. At the same time, gold has been hammered. It's come back a bit, but it has been hammered. Gold miners have been hammered even worse by one index, the AUX. It's the Philadelphia Silver and Gold Miner Index. Will trade on the Philadelphia Exchange. They're at all-time lows in history. One reason I've always been nervous about getting into gold miners. They are certainly cheap by many valuation metrics and continually get cheaper. So I've stayed away from those, and as you know, we recently, fairly recently sold half our gold, and I'm going to make a recommendation at this point that we sell the rest, the PHYS, PHYS, simply because I think a lot of people are leaving that gold trade. I don't know if it's going to be able to maintain its current position. I'm certainly glad we sold earlier. I do think it's a great long-term investment, but it's going to get beat up probably another 10 or quite possibly another 10 or 15%. Just not willing to take that loss now, and I'm not willing to say that it's going to stop at 950. My guess is it will stop somewhere between 950 and 1,000. We have other ways we can better deploy that money in the next year or two. I don't expect gold. Well, gold may take a bit of a jump when the market falls, but again, I think the Fed will print, and that will push gold back down. So I think gold's going to be stuck with a lot of negative feelings towards it, and I think that's going to keep it down for quite a while. We will get back into it. We will buy it later, but right now it's a sell. For real nice rebounds, I'm looking more for natural gas, which I think will do extremely well, despite having taken a much bigger drop than gold. Much bigger. I think it's going to jump up much quicker over the next 6 to 12 months, likely to see a very nice increase. In the meantime, the pharmaceuticals, the healthcare stocks have done well. We'll talk more about that in our monthly report. But basically, that's the sort of the big news on this report. Beyond that, in terms of just other interesting things, the Shanghai Index took its biggest one-day drop ever, or at least in recent history, 8.5%, biggest in the last 10 years. Since its decline, or started its decline in June, the Chinese markets lost about $57 billion worth of market cap. That might sound like a lot, but that's only about as big as Hewlett-Packard. And as we know, that's actually far less than companies like Amazon and so forth, and all of this is far less than the combined U.S. market. So it does emphasize just how small the Chinese stock market is relative to ours. That's not necessarily a positive, and that probably indicates just how inflated our stock market is, but could be inflated quite a bit more once the Fed starts doing its money magic again, which I think it will. If this market goes down, I think this market will go down. So with that, pretty much, otherwise a relatively slow week, and I look forward to our next update, which will be a video update. Until then, it's Bob Wiedemer with the Aftershock Investor Report. Take care.